Hi and welcome to Axis Direct Opening Bell, your essential pre-market podcast. In just minutes, get key global updates, overnight trends, and market-moving factors that set the tone for the day. Whether you are a seasoned trader or just someone tracking the markets, this is your go-to briefing to stay ahead at all times. So let's dive straight in. Good morning on Wednesday, and we'll start with the global markets. Overnight, the S&P 500 rose 0.6% and posted a new all-time high during the session. The blue chip Dow advanced 1% and also reached an intraday all-time high. The Nasdaq climbed 0.7%. US equity futures were little changed in early Asian hours. Meanwhile, Asia-Pacific markets traded mixed today as investors parsed Australia's inflation data. Moving on to the Indian markets, Nifty closed the previous session at 26,179, down 72 points, whereas Bank Nifty ended at 60,118, up 74 points. Nifty remained volatile in the previous session, weighed down by a sharp decline in Reliance of about 5% and weak HSBC PMI data. The index found support near Friday's strong bullish candle low at 26,118 and witnessed a modest relief bounce. On the daily chart, a spinning top with long shadows on both sides highlights heightened volatility and indecision. For today, a break above the previous session's high of 26,274 could extend the rally towards 26,350. On the downside, a slip below 26,125 may trigger a stronger profit booking. That could pull the index down towards 26,040, which is the lower band of the rising channel in place since mid-December. At the sector level, Nifty Pharma emerged as the top gainer with a 1.7% rise, while Nifty Media was the biggest loser, shedding 1.1%. Out of the 12 tracked sectoral indices, 9 closed in the green and 3 ended in the red. Amongst the FNO stocks, IEX was the top performer, gaining 8.8% on hopes of relief in the market coupling case. At the other end, Trent was the worst performer, falling 8.5%, as investors reacted to a sharp slowdown in growth metrics highlighted in its December quarter results update. At the macro level, India's services sector growth slowed in December, with the PMI revised lower as new businesses and output moderated. The domestic equity market showed notable resilience in yesterday's session. This came despite geopolitical headwinds after US tariff warnings on Russian oil imports. While the headline indices stayed cautious, the underlying market structure remained orderly. Bank Nifty stood out as the key driver of strength. It gained around 140 points, supported by a strong 7.4% rise in open interest to 15.7 lakh shares. This clearly points to a high conviction long build-up. In contrast, Nifty futures slipped 46 points, even as open interest rose 1.9% to 156.3 lakh shares. This suggests tactical short positioning rather than broad weakness. Importantly, Nifty premiums expanded to 106 points and Bank Nifty premiums to 194 points, showing that participants are still willing to carry positions at higher levels. The derivatives setup remains constructive. Nifty support is firmly placed at 24,900 with a recovery target towards the 26,400 resistance zone. The Nifty put-call ratio eased to 0.92 due to expiry-related call writing, where calls outweighed puts by a 2-to-1 ratio. Meanwhile, Bank Nifty's PCR strengthened to 1.15, reinforcing the sector's relative outperformance. FIIs were marginal net sellers in cash with an outflow of 108 crore, taking the month-to-date total to 1,763 crore. However, the FII index futures long-short ratio improved slightly to 0.15. Proprietary desks are positioned for non-linear upside through aggressive call accumulation, while retail participants have shifted towards a more linear trend approach. With India VIX stable at 10.02 and the rupee strengthening to 90.18, the markets appear to be in a healthy consolidation phase, setting up for tactical moves as global policy cues unfold. On commodities, gold rose 0.8% on Tuesday, while silver surged a sharp 5.3% as investors continued to move into safe haven assets. Market uncertainty has intensified after US President Trump's ouster of Venezuelan President Nicolas Maduro. This has elevated geopolitical risk, which is expected to persist and could continue to support gains in precious metals. From a technical standpoint, both gold and silver are showing a clear V shaped recovery. This signals a strong rebound and increases the likelihood of prices revisiting higher highs. In contrast, WTI crude oil slipped 0.85%. Prices were weighed down by expectations of ample global supply, along with continued uncertainty around developments in Venezuela. That's it for today. Please note that this podcast serves solely for informational purposes and should not be considered as financial advice. For a comprehensive disclaimer, please visit our website. Thank you and see you tomorrow at the same time.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.